morning and welcome to Friday. I'm Joe Jaquint, CEO of the Patriot Trading Group. Our toll-free number, as if you didn't know, 800-951-0592. The website at allamericangold.com. And get out there today. We got two of the guys that I always tell all of you, put the noise aside. If you want to know where we're headed, Jeffrey Gunlutz, Ray Dalio are guys you need to pay attention to. They are both out. Both of their comments are up on our site this morning. Just like I said, the bottoms are in. Gold has had a massive day. Silver, all the silver, we've been waiting and waiting and waiting. I don't think we're going to be waiting much longer. Gold is up $46, 16.76. So already the first key level takes 16.70. That's a key level. The next level for gold, 16.92, and then of course we'll set our sights to 17.40. Silver, $19 has been a key area. We needed to see silver break through 20. Silver is up pretty much $1.25, 20.63 on silver right now. The Dow is having a rebound day, up 400 points as we got a ton of Fed governors. So, Wednesday we had Jay Powell. Today we had all these Fed governors and singing the dovish tune. Here's what we know, especially after today. We had like 4 Fed governors come out and talk about it. Everyone's comfortable going to 50 basis points. So just know that in December, barring something unexpected, and what I mean by that is I don't even know. How hot would the inflation readings have to be to get them to go back to 75? I actually don't think inflation is going to go down at all. We're actually going to get 2 inflation numbers before the next rate hike. The first one being next week. And I think it's going to stay right where it's been in those low 8s. But they're all saying, hey, we're going to go 50. Right now, they're setting the expectations here. So let me just tell you what they're setting it up for. 50 basis points in December, 50 basis points the 1st of February, 50 basis points in March. And then I think at that point, do they continue on the 50 basis points in May, or do they signal at that March meeting that they're going to go to 25 basis points? And again, they're going to raise rates and continually raise rates until people get fired. It's just that simple. First time, we had jobs today. The government jobs number, just like I told you it would be, between 200 and 300, 230 some thousand, 239. First people getting jobs for the month. Interesting details because that was hotter than expected. They were, expecting about 205,000. So that was more people working. That's not good. Wages were up 0.4% for the month. They were expecting only 0.3. The one thing that I guess maybe was a little good, we had a big wage increase number from last year fall off. But wages still accelerating at about 4.7%. But here's the problem with that. If inflation, they're admitting that inflation is around 8.5%. Well, that math doesn't work. And of course we know, right? Remember Bubba Horowitz this week. They lie about the number. So it's actually worse than that. It's going to be interesting. The other big news was labor force participation rate. Just not doing what they wanted. They wanted to see more people entering the workforce. We actually got less people in the workforce. The unemployment rate did tick up. a couple of tenths to 3.7. But again, it had everything to do with these Fed governors coming out. Here's what I'm going to tell you. Gold and silver, the rally has started. It will continue on as they continue to raise rates. They're going to be on what I'll call a ratchet down rate hike cycle. The question is, when will the cycle end? And the answer is pretty simple. When does it break? So I'm very, very confident the jobs numbers for the end of the year are going to be good. Because we got Christmas, there is hiring, so there's no let up there. The first jobs number that we get for next year, you got to remember they use the seasonal adjustments. Well, people have already said, hey, we're going to hire less people this year, so I think that number is going to be screwed up and not in a good way. Right? So now you got another good jobs report. I mean, we could be well into April or May before we start seeing some bad jobs numbers because, and I guess what I'm trying to say is the Fed's going to overdo it, and you need to get prepared. 800-951-0592. By the way, I'm solo today. Jason is off today. His wife, Brooke, it's her birthday. Happy birthday to Brooke. You know, a lot of us out there, you guys know what I'm talking about. When you marry above your pay grade, and Jason has absolutely done that as well. Brooke is just a beautiful person. I hope you have a great birthday. I'll be back with more. Don't touch that dial. 800-951-0592. Patriot Radio News Hour. And again, right now, 10-year note, 4.15. Super close to the Fed's funds rate, knowing that it's going to go higher. But this is going to put mortgage rate pressures are going to continue as even the rest of the world now really fighting for liquidity. The foreign bank repo market has exploded this week, the biggest weekly jump ever. So think about this. The other day we talked about how central banks have bought more gold than ever. And when did they do this? The last quarter. We've been seeing this liquidity problems. We've seen it in Japan. We've seen it in the UK. We saw it at Credit Suisse. And today we learned this week it's gotten even worse. $350 billion. And again, this is the problem. They're trying to fight inflation, yet they've got to keep printing money because they have liquidity issues that are raging all over the marketplace. And again, I think this is why this is a failed experiment. And I wish more people were paying attention. This is going to get painful. It's going to get ugly. The strategic oil reserve. Today was the last day. The last day. Guess what oil is? Up $4 today. $4 in one day. Why? Because they know what's coming. The diesel and gas shortage is going to continue to get worse. I got some good news. Walmart says that, hey, you know what? We're so nice. Of course, obviously they're huge. They're just gonna eat losses on Thanksgiving pricing. They're gonna take the turkeys and all the fixins and put them wherever they were last year. That's what they're gonna have them this year. So at least a little bit of relief. Unfortunately, that's one day's worth of food, not really going to offset too much, but be prepared for what is coming. And we already have all of these cracks. What did these central bankers see? Because they had to see something. Because there's no reason to slow the pace. Think about it. They were at 0. We're at 4%, well, just under 4%. And inflation has actually gotten a little worse. Because when they started raising rates, inflation was, high fives, low six. We're in the low eights. At least that they're going to admit to. So why would they be stopping? And again, look at today's jobs number. That doesn't say low inflation, right? It doesn't say 3.7% unemployment rate. That's nothing. Technically, the Fed for years had said, well, 4% is about all you can have because of that 3.7%, 2% of that are people just transitioning jobs. They've quit. They're not going to start their new job for they're going to take a few weeks off, rest. And before they start their new job, and that 4% was a barrier that you couldn't go below that very often. We've been below it all year. But again, something's amiss. And I think that what they're seeing has to be pretty scary to stop the pace. Jeff Gundlach, he was out talking at the latest Schwab conference. This was yesterday, saying that by next May, that inflation will have already started peaking, and that by next May, now he's talking about the Fed's favorite number. So the Fed's favorite number for inflation is 6 right now. He's saying that could be around 4 by next May. And he said that the economy, avoided the recession this year. Those conditions are going to change and change noticeably. He says the next 6 months is going to be where you see huge changes in what is going to be the remnants of this economy. He says that he cannot find a single part of the economy that will plug the gap or pick up the slack. He said credit, and this is things we got to pay attention to, credit card usage is at all-time record highs. It's way up. He says, simply put, because real inflation-adjusted wages, right? In other words, hey, forget what they're telling you, okay? Because every number they come out, like the numbers I gave you today, they all got massaged. I mean, we could actually have a real number, but they don't want to do that. Right? We want to even it out. That's just what they like to say. Oh, we just want to even it out. That way, from month to month, right, we don't get the big variances from month to month. Obviously, outside of Christmas hiring, what variants are they talking about? This isn't the economy from the 40s, but neither here nor there. He says, real. Let's just be real. Wages are falling. That's real. But I just told you wages are up 4.7%, according to the government. Of course, what Jeff Gundlach is saying is, listen, real inflation, 15-20%. Real wages, let's take ADP. Remember ADP said, hey, wages last month were up 11% for the majority of the jobs created. Look at the huge difference. How can the government say 4.7? ADP technically said 7.7 for all jobs, but all the jobs being created were those low-paying jobs, which was up 11%. You're still losing money. And he says that workers are not able to keep up with the cost of living. Essentially said the housing market is now dead. He says housing is going negative. The economy is going to lose several million jobs because of housing. Now, think about yesterday. Wells Fargo was laying off. Mortgage Open Door was laying off. Zillow's been laying off. The problem is, like the realtors and all these other folks. But here's what Gundlach had to say about that. That's where he thinks it's going to start. We're seeing the tech layoffs. He kind of said, tech's going to be laying off. But housing, when the housing layoffs come, and I've been waiting, right? When are home builders going to be laying people off? It's got to be coming. has to be coming. Once that job market slows down, you're not going to be able to turn it around. In other words, then you have that cascade effect. Right? If you got tech people losing their jobs, if you got housing sector, and housing's huge, right? Because you've got all the subcontractors, you've got all the home builders, you've got the mortgage side of it. I mean, it is multifaceted. If we start seeing those layoffs, well, all of a sudden what happens? Those people stop spending. Well, if those people stop spending, they stop going out to restaurants, they stop going out to bars, right? Now all of a sudden the bars and the restaurants are laying off. And this is what Gunlatch is saying he expects to happen, and he's put a date on it by May of next year. Get your financial house in order while you still can. Listen, $20 gold, I'm just going to reference it, $2,095 today. That's for everybody. I would buy every available one you could get your hands on. I've got 4 more rolls of 10th ounce that I got this morning. I had a seller this morning. I got 4 more rolls of 10th ounce. They're $250, 1 through 49. You buy 50 or more, $245 at 800-951-0592. And again, the bottoms look, they're in here. We've been waiting for this as the Fed keeps making these announcements of this ratchet down. So right now, I expect the next 3 meetings to be 50 basis points apiece. By that third meeting, which is in March, you're going to see the Fed say, hey, we're going to start ratcheting it down. And again, Gunlatch has already said May's the problem, right? We're going to be too late to turn around by then. I expect the Fed to raise rates in May. They may raise them one more time before they realize what's ultimately happened. But again, that's going to be the next leg up, right? So gold's going to have a decent run into December, maybe a little sell-off towards the end of the year as we get close to that rate hike. And then by the end of February, you're going to hear a lot of dovish talk, and I think that's when gold takes the next leg up. Then when they stop, it takes the next leg up, and then as the recession comes, right, that's when we see what gold. Then we're going to be talking about $3,000 gold. That's just where it's going to be heading. 800-951-0592. Basically, I want to give some more comments from Jeffrey Gunlatch. The mortgage refinance industry completely dead, right? Wells Fargo down 90%. Right now, home builders are saying that contracts are down 55%. That's the highest number I've seen yet. It's going to get worse. And then he's talked about Jay Powell. He says that he believes that Federal Reserve Chairman Jerome Powell wants to put the U.S. in a recession, and he's warning against, so he warns twice in the same interview. Once the layoffs start, the momentum, it's hard to stop. And this is the problem, right? Because Jay Powell, he said it, and I've repeated it for all of you. Be smart here. He just wants a couple million people to lose their jobs. And then somehow it's just going to stop there. But that's really not how it works, is it? Right? As companies start worrying, they stop spending, right? They're already doing that. All companies have been pulling back. But once these layoffs get going, right, it's really hard to stop. And that's what Gunlatch is saying. And he's talking about, by the way, the Treasury market's an absolute mess. 2-year Treasury notes, almost 4.8. The 10-year's at 4.15. It's getting worse. It is screaming. Here's Jeff Gunlatch's word about the bond market. It is screaming that it wants the Fed to start cutting rates. This is really interesting, because I'm sitting here and I'm saying, well, the numbers aren't that bad. Right? Look at the jobs numbers. Look at the jolts. People were hiring, looking for workers. And Gunlatch is saying underneath it all, underneath that hard candy shell, it's like an M&M, right? That's what he's really saying. Hey, it looks real good, but that gooey stuff that's in the middle, that's not chocolate. No, that's people not having jobs. And he's saying that the bond market is telling the Fed that they need to start cutting interest rates, and they have to start doing it within 6 months. Well, here's the problem. The Fed's pretty much on pace to still be raising rates. I think it's going to get really ugly after Christmas. Buckle up. Buy while it's low. 800-951-0592. I'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe Jaquint here solo today. Jason is off for his wife's birthday. Where Jeffrey Gunlatch was at a Schwab meeting, if you will, conference. And it wasn't very good. I wish he had nicer things to say. He talked about the JOLTS number. That was the number that came out. That came out on Wednesday, which said that people were looking to hire. The amount of people looking to hire went up, which is not what the Fed wants, right? He's already said Jay Powell wants to put the economy in a recession. Wants to lose 2 million jobs. It's impossible to do. But he goes, that number's easily manipulated. He goes, I could go out and say, I want to hire 1,000 distressed debt analysts. He goes, but if I put there that I want to pay a minimum wage, I'm not going to get any applicants. And that's what he's claiming in this JOLTS number, is a lot of these companies coming out with wishful thinking about hiring a bunch of people at less than the wages they're already paying. I don't know, but that's just what he said. But he had a lot more to say. He's extremely concerned, calling the Federal Reserve clumsy, heavy-handed, that it will overplay its hand. And he made a great point when talking about the central bank. He goes, when the pandemic started, the goal of the Fed was, in his opinion, was to get inflation to 4%. Right? Because remember, you got to think back. Remember how they were crying about it? Oh, inflation's just not good enough. We're trying to get it to 2%, and it just won't get there. He said they wanted 4% for a little while. Remember, they even said that a bunch of times. I forgot all about it. And they even remember, and they would say, oh, we just want to, it's okay to overshoot for a little bit. It is? I didn't know that. Because you never had said that. You said you wanted it to be 2. So why would it be okay to overshoot? And why would it be okay to overshoot by double? Of course, they can just, it was under 2 for so long. Well, why was it under? Well, because you had rates at 0. But anyway. Then he goes on and say they've overshot this 4%, by 500 basis points, right? 9%. Why should anyone believe when they miss targets by that much that somehow they're going to nail this soft landing? It's a great point. Why do we believe anything these people say? Matter of fact, and this is the problem, because they've got TV, right? They're just cheerleaders for them. Whatever they say, it's great. But then when you actually look at their track record, they have no idea what they're doing. None of their predictions are accurate. Listen, if me or you were doing this job in the real world, we'd be fired. That'd be like going in and saying, hey, it's going to be, rebounding, it's going to be $10,000. And then you come back to the homeowner, as you started the job and said, well, you know what, it's going to be 15. And the homeowner's not happy, but okay. Then a few weeks later, well, it's going to be 20, right? By the time you're done, it's going to be $50,000. You wouldn't be in business very long. And this is what Gunlash has said. He goes, he's now questioning this 2% inflation target, saying and asking exactly what I've said from day one. I told you when they created this lie, this was Ben Bernanke and Janet Yellen, that, 2%, that was the number in 2008. There's going to be a new number. Jeff Gunlatch is saying, is this number even realistic? If inflation falls, and again, he wants you to let's cut through the bull crap. If inflation falls from 8% to 2%, there isn't a chance, his words, that it will stop there. And again, pointing out the idiocracy of these statements. Listen, there was 4 Fed governors on TV today saying the same crap. And they should be like, why would that be? That, right? We know that makes perfect sense. That's huge. That's a huge collapse. Why would it stop? It wouldn't. And this is what he's saying. This is why this is a huge, huge problem. And he goes that we're gone from the least attractive bond market of all time. I talk about 10-year note 0.5%, right? To the most attractive bond market in a decade. And we've done it in a matter of months. And they're talking about the foreign holdings and the fact that none of this is sustainable. And this is the big problem. This is the kick the can down the road mentality. This makes absolute no sense whatsoever. All of this nonsense that they've been spewing isn't possible. And again, he started talking about the losses for the Federal Reserve. Remember, I just told you last month they lost over $4 billion. This month it's going to be $6 billion. The Fed could send Treasury a loss of $500 billion as foreign markets dump treasuries. $500 billion loss. That's hard to contemplate. I don't know how that would even be possible. How would that work? This is again, and he's just pointed stuff out. This whole fallacy of quantitative tightening, this whole fallacy of raising interest rates. The bond markets are breaking everywhere. Foreign governments, foreign banks needed $350 billion of liquidity last week, the largest weekly amount ever. Batten down the hatches. 800-951-0592. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. And we got gold up $45 right now, $16.75. Silver up $1.20, $20.60 right now. Got $20 gold pieces, $2,095. 10th ounce. I've only got a couple rolls left. 10th ounce, which we know we've got this smattering. Got lucky here. Don't know why that happened and when it's going to happen again. This may be We had someone sell 4 rolls. Half of those are already gone. I've got 2 rolls left. They're $250, 1 through 49, 50 or more, $245. Silver, man, wow. It's not going to stop here. I've got 10 rolls of those Ike silver dollars left. I'm not going to raise the price. $285 on the Ike silver dollars. There's 20 Ike silver dollars. That's 40% silver, $285. But just to give you an idea, silver eagles, $795. $795. That's $39.75 an ounce on U.S. silver eagles. Silver half dollars, $280. Silver quarters, $255. Rolls of dimes, $127.50. And again, buy them now. I think price is going up, but I think premiums are going up along with it. Just a quick correction. We had 239,000 private sector jobs. When you add in government jobs, the number was 261. So I misstated that number. It's actually even higher than what I thought. They were looking for 205. We have this divergence, though. The household survey, which tracks unemployment. So the Bureau of Labor Statistics does the jobs created number, this 261. The household survey does the unemployment, right? 3.7%. In the household survey, go to March of this year. So think about, and why do we go to March? Because that's when the Fed started raising rates. So we go to March. There was 158.5 million people employed in March of this year. Fast forward to today. 158. Excuse me, I had to sneeze there. 158.6 million. And when you expand it out, in the household survey, there's only a difference of the number of people working of 150,000. Not just this month. We said 261, and that's the lowest number of the year. Right? Think about it. A lot of months we had 400,000, 500,000, 300,000. But the household survey only says 150. Matter of fact, they're saying the difference between the numbers is about 2.5 million jobs. I know exactly where they are because a lot of people are like, oh, there's something's wrong, right? Jeff Gundlach, data's easily manipulated. Here's what I think it is. These are just all these people getting another job. That's the 2.5. It looks to me that the vast majority of these jobs created, right, these 260, 300, 400, 500,000 jobs, it appears that the vast majority of them are just a part-time worker getting another part-time job, or a full-time worker, which is probably more likely, a full-time worker getting a part-time job, right? And this is, again, going back to what Jeff Gundlach said. If that's the case, which it appears that that's what it would be, if that's the case, right, this economy isn't quite as strong as people think. Go look at the credit cards, right? What's a great reason to go out and get a part-time job? Well, because at the end of the month, I don't have enough money. And I had a credit card, I've been putting it on there, and guess what? My credit card's getting ready to be maxed out. I gotta find a way to get more income. According to the household survey since March, the U.S. has lost 490 full-time jobs with a gain of 492 part-time jobs, while 126,000 workers were forced to get more than one job. So again, they're trying to say, hey, double's not right. Right? We've lost all these full-time jobs. They got replaced by part-time jobs. And again, I don't know. I think that it's more than likely all as we're seeing in these jobs number is people getting part-time jobs. And go back to ADP this week. They were saying 236,000 jobs created, 210 of them, 210,000 of them. So pretty much all the jobs were in that leisure hospitality industry, and those jobs are usually part-time. Right? Hey, I'm picking up a couple shifts as a waitress. I'm picking up a couple of shifts, tending bar, or I'm picking up a couple of shifts at a fast food restaurant, things of that nature. That's usually what we see in those industries. So the potential of why Jeff Gunlad says in 6 months it's going to be very different, I think this is why. Because these are easy jobs to have go away. 800-951-0592. Final segment coming up. 800-951-0592. I don't know what's happened here. The Dow was up 467 points. It's now up 67 in just a matter of minutes here. The NASDAQ's gone negative again. Matter of fact, the NASDAQ, 10,300, getting ready to go below 10,000. The S&P has just turned negative. Gold and silver unaffected. Gold's up $45, 16.75. Silver's up $1.20, 20.63. U.S. $20 gold pieces, $2,095. The 10th ounce, got 2 rolls of 10th ounce left. That is it. $250. Buy 50 or more. They come in rolls of 50. Buy 50 or more. $245. And then I had 10 rolls, if they're still available, of those Ike dollars. And I'm going to leave that price the same. So think about it. Silver's up $1.25 here. $2.85 a roll on those 10 rolls. And these are BU. These are like Mint State 63 type Ike dollars at $285 at 800-951-0592. And again, I do not see anything. I'm looking, the bond market, 417 on a 10-year note. I mean, that's still pretty low. It's got a lot higher to go. Even in the currency markets, the dollar's weaker today, but nothing big. And I don't see anything on the tape as to what's happened there. And again, I know that the Pentagon's been warning about Iran possibly attacking Saudi Arabia. And I know that the Korean Peninsula has gotten interesting as to North Korea has been launching a ton of missiles. Today, South Korea said they had a scrambled jets, saying that there was 180 North Korean warplanes near the border. And again, I don't think that's it, but, I don't know. It's a pretty abrupt turnaround. And I think people are starting to realize maybe, hey, wait a minute. As we're looking at these jobs numbers, maybe things aren't as good as I thought. I think this probably has more to do with, do we have another foreign entity in trouble? We know, obviously Japan's well documented, the UK's well documented, what's going on with Credit Suisse. Is there somebody else now? That would be something that would be likely to me as we watch this play out. 800-951-0592. Get some gold and silver put away, and then enjoy the weekend. the weather. Man, it was like 40 degrees driving into work this morning. It's really cooled down nicely. Get out there, get the jackets out, get the winter clothes out. I know there was snow in the high country. Try to enjoy that weekend. You know what? You'll sleep a lot better at night after you call us. 800-951-0592. God bless everybody.
Wishing for a Christmas mortgage miracle? Patriot Trading Group wants to make your wish come true. Just enter to win on Family Values Radio website, and you can enjoy having your mortgage paid for a year. That's right. It's the Christmas Mortgage Miracle Contest. The winner will receive their mortgage or rent payments covered for a year. To enter, go to FamilyValuesRadio1010.com and click on the banner. Enter once each day to increase your chances to win, and look for bonus entry opportunities. That's FamilyValuesRadio1010.com. And enter the Christmas Mortgage Miracle Contest, sponsored by Patriot Trading Group. See our website for details.